The team at Technology for Hotels knows how busy you are, so we've created this concise briefing to keep you up to date on key happenings in the hotel industry. Let's dive in. We're tracking three really powerful forces this week. First, how global brands are pivoting to the mid-market.
Then there's the record-breaking development speed across the Asia-Pacific region.
And finally, a really disruptive shift in hotel technology. But let's start with a big market signal. Marriott International has officially terminated its licensing agreement with Sonder Holdings.
Yeah, and that really underscores how difficult it is to scale those fringe apartment rental models. But the real story, I think, is where giants like Marriott are putting their energy now.
And that's Japan.
That's Japan. They're running what you might call a perfect barbell strategy. It's fascinating.
A barbell strategy. So hitting both ends of the market at once.
Exactly. On one end, they're pushing City Express by Marriott into Asia-Pacific for the very first time.
Right, converting two properties in Osaka, targeting that value-conscious traveler.
They're locking down the high-volume, quality mid-scale traveler in these key urban hubs. It's a smart volume play.
But the other end of that barbell
Is pure luxury. They've just signed the first ever internationally branded luxury hotel in eastern Hokkaido. 100 rooms on the shores of Lake Akan, opening in 2028.
But is there a risk there? I mean, when you chase mid-scale volume so aggressively, do you dilute the premium identity that Marriott works so hard to protect?
It's a calculated risk, but it's managed through very distinct branding. The City Express guest isn't the Lake Akan guest, and what's really interesting is how domestic players in Japan are reacting.
You mean the merger of Polaris and Menashin?
Precisely. They've united Coco Hotels, Hotel Wing International, and Tenza Hotel. Just like that, they've created an entity with 63 hotels and nearly 9,500 rooms.
That immediately puts them in the top 10 of domestic brands by scale. That is some serious competitive muscle being built up.
It is. And at the same time, boutique luxury is still pushing forward. Nomura Real Estate is starting a new NOHGA hotel overlooking Shinjuku Gion. So activity is just intense right across the board.
And that intensity isn't just in Japan. The whole region is hot.
Oh, absolutely. If you look at the Asia-Pacific construction pipeline and you exclude China for a moment, it's at a record high. Over 2,000 projects, nearly 435,000 rooms.
And most of that is at the higher end, right?
43% of it, yeah.
Yeah.
It sits squarely in the upper upscale and upscale categories. The whole industry is moving up the value chain.
Okay, so let's follow the money. In Singapore, Aravest just picked up the Hotel Miramar for 160 million Singapore dollars.
And that's a perfect example. The key thing here isn't the price tag, it's the plan. They're going to rebrand it as a DoubleTree by Hilton.
So investors are buying older, well-located assets specifically for that global brand uplift.
It's the same story in Australia.
Yeah.
Look at what Choice Hotels is doing with their Bayside Geelong property.
Right, taking a 1962 building and turning it into a 4.5-star boutique hotel. But the details of the mandate are what's key.
Exactly. It's not just about new rooms. It's about solar power, EV charging, and a real focus on inclusivity with 10 fully accessible rooms.
So sustainability and accessibility are no longer just marketing buzzwords. They're required infrastructure now.
They're table stakes for any major capital investment.
Yeah.
And even in the luxury niche, you see this push. Mercure on Kangaroo Island is adding 8 new luxury villas.
Which makes sense. They're capitalizing on the new ferries and the golf course that's coming. It's all connected.
It is. And you see that in Thailand, too. Keda Group is rebranding Beyond Khao to introduce this slow glamour philosophy.
Right, for their all-villa resort. Meanwhile, CG Capital is planning 5 new hotels across Phuket and Koh Samui.
So all this development, it's expensive. It shows incredible confidence. The big question is, though, is it actually driving sustainable profit?
Good question. Let's pivot to the financials. Choice Hotels' Q3 results looked pretty strong. Net income shot up to $180 million.
It did. But the real story is in the global dynamics. Their international RevPAR grew by 9.5%.
Which completely absorbed a 3.2% decline in their U.S. RevPAR.
Yeah, and that just confirms it. Global diversification is the essential risk strategy right now. It's a hedge.
And for the big players like Marriott, it's luxury that's fueling the whole machine.
Without a doubt. Their luxury segment posted a 4% RevPAR increase. The rest of their portfolio, just 0.5%.
So those high-margin luxury bookings are literally bankrolling the aggressive mid-scale expansion we were just talking about.
And the investment community is seeing those returns. JLL data shows Hong Kong's hotel investment volume jumped over 100% year over year.
Wow. And the forecast is for APAC investment to hit $13.3 billion by 2026.
Supported by tourism arrivals already back at 92% of pre-COVID levels. The demand is there.
And for a perfect snapshot of that demand, you just have to look at Singapore during the Formula One Grand Prix. Their October performance was just a record.
An absolute record. RevPay hit an unheard of 317 Singapore dollars, and on one day it smashed past 726.
Which means if you weren't technologically optimized to capture that peak, you left a huge amount of money on the table.
You did. And that makes our next topic, why hotel tech is struggling to keep up, so critical.
Okay, let's unpack this. The 2026 Hotel Technology Outlook report from NYU seems to confirm a major pivot. The industry is moving away from those big, clunky, all-in-one platforms.
Yes, it's a revolution towards specialized, best-in-class systems. And the data is pretty stark. It shows real dissatisfaction. 30% of all-in-one users are planning to switch.
And how many best-in-class users would go the other way?
Only 14%. It's a one-way street. Operators are demanding deeper functionality that these monolithic platforms just can't deliver.
So this raises the obvious question. If best-in-class is so much better, why isn't everyone switching tomorrow?
Because of the industry's biggest pain point. 38% of professionals say it's integration. We've created this Frankenstein's monster of brilliant specialized systems, your CRS, your PMS, your CRM, that simply do not talk to each other smoothly.
And that bottleneck is holding everything back.
It's the single biggest barrier, and compounding that internal problem is this massive external challenge of how the guest journey is changing. We have to talk about AI-driven agentic search.
Okay, so this is more than just typing keywords into a search bar.
Fundamentally different. Think of it less like a search engine and more like a digital assistant that you hire to get a job done. It doesn't just give you links, it executes tasks.
So it can build an entire itinerary, compare the options, and then handle the bookings itself.
All in one conversational interaction. And the strategic risk for you as a hotelier is massive. If your content isn't optimized for this, accurate listings, proper schema markup, AI-friendly data, you risk becoming invisible.
You're not just competing for a ranking on a page anymore.
No, you're competing to be the single executable option that the AI suggests, the whole new ballgame.
It all points to restructuring for a, well, much bigger future.
To pull it all together, the market is really defined by this strategic tension. You have global brands using their high-margin luxury profits, that 4% RevPR growth, to fund this massive volume play in the mid-scale.
Especially in APAC, where the volume is just exploding.
But the core challenge is that broken link in the chain. The industry knows specialized tech is better. It knows it needs it for efficiency. Yet nearly 40% of leaders say integration is their biggest hurdle. And the new demands of agentic search. Here's a thought to mull over. How long can the industry tolerate that 38% integration pain point before it starts to actively undermine these multi-billion-dollar expansion strategies? Because the winners will be the ones who solve that interoperability challenge first. On to the next segment, stars in motion. So we're seeing two fundamentally different strategies in this talent battle. Let's start with TFE Hotels. They seem to be focused squarely on their internal strength. Really emphasizing development and promoting people from within their Australian operations.
Promote from within culture.
Exactly. And it's not a small move. TFE has just promoted 7 key leaders.
7. That's a significant push.
A huge push. We're seeing roles that really solidify their core management, like Jay Hoare stepping up as area GM for the ACT,
Right.
and Sid Singh taking the cluster GM role for a bunch of Sydney properties.
Right.
It's all about reinforcing their base with people who already know the system.
Proven talent.
Right, and the list goes on. Chris Greening at A by Adina Sydney, Andrew O'Donovan at Travelodge Hurstville, and Serena Flower at the Sydney Airport Travelodge.
So a lot of key locations.
Key locations.
Yeah.
And Claire Slattery in Wollongong, and Fernando Rousseau at the EVE Hotel Sydney.
Okay, so that's one clear strategy.
Now contrast that with Hilton. While TEFE is, building up its walls from the inside, Hilton is launching this targeted commercial offense.
An external push.
A very external one. They've added 4 new experienced commercial leaders to basically accelerate revenue growth across the region.
So they're bringing in outside expertise.
They are. specifically for growth. Rebecca Williams is now the regional director of Hilton Worldwide Sales, and Elena Fragasso is director of international sales.
These are major global-facing roles.
Absolutely. Then you have Ivy Zhang as director of sales and marketing of the Hilton Sydney, which is a huge property, and Mahasan Balfour as commercial director for the Cairns cluster. This isn't about succession. This is about making money now.
Immediate impact.
And it's not just managers or sales leaders. We're also seeing these very specialized appointments.
Right, the ones that directly affect the guest experience.
Exactly. Like at the new 25 Hours Hotel the Olympia. The focus there is clearly high-end food and beverage. Luke Davenport is the new head chef, working with Chloe Sharp, plus Raj Vanyasingam as the F&B director, and Lilia McCabe as venue manager.
So they're building a whole destination team from scratch.
And we can't forget what's happening across the Tasman. EVT Hotels and Resorts is making big moves in New Zealand, specifically Wellington.
In the capital, yeah.
Colin McLean is now the GM of Ridges Wellington and also area GM for Rotorua, and Luke Smith is taking over as GM for QT Wellington.
What's fascinating here is how you have to connect all this movement to the bigger economic picture of the region.
The construction boom, you mean?
The construction boom. I mean, this talent scramble isn't happening in a vacuum. The hotel construction pipeline in Asia Pacific, if you exclude China, is at a record high.
How high are we talking?
We're talking 2,262 projects. Wow. At the same time, the luxury segment is just incredibly strong. So that raises a big question.
It is.
Is this rush for talent just about staffing all those thousands of new rooms? Or is it something else? Is it just hyper competition for the very few top-tier people who can actually perform in these high-stakes environments?
That is the core question, isn't it?
Yeah.
So the real story is just beginning.
Exactly. Track where these stars in motion actually lead their companies, because those decisions made right now are going to decide who wins the next cycle of growth in the region. That wraps up this week's 5-Star Weekly Briefing.